Based on the historical data and forecast, Bitcoin shows a generally upward trend, consistently testing the resistance level of $87,400. The RSI fluctuating around 40 to 50 indicates that the asset is neither significantly overbought nor oversold, suggesting a stable momentum. The Bollinger Bands are widening, indicating increased volatility and potential price swings. Considering the forecast for the next week, with prices ranging from $85,200 to $87,000, a long position is warranted. We will enter a long position at $85,200, placing a stop-loss order at $84,200 to mitigate potential downside risk. Our initial target price will be $86,100, aligning with the support level, and we will adjust the stop-loss to break even at $85,200 once the target is reached. To further capitalize on the upward momentum, we will implement a second long position when the price touches the lower Bollinger Band. Given the forecast, this could occur around $85,700. The stop-loss for this second entry will be set at $84,700, and the target price will be $87,000, aligning with the upper end of the forecast range. This dual strategy approach, combining a primary long position with a secondary entry based on Bollinger Bands, aims to maximize potential returns while effectively managing risk. The combined portfolio will offer a diversified approach to capitalize on the predicted upward trend in Bitcoin. Based on the historical data and forecast, Bitcoin Cash shows a slight upward trend with consistent support around $333. The RSI values have fluctuated between 44 and 51, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening recently, suggesting increasing volatility and potential for price movement. Considering these factors, I propose a moderately bullish strategy. We will initiate a long position at $330 with a stop-loss placed at $325 to protect against unexpected downturns. The initial target price will be $341, aligning with the forecast for the next week. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI dips below 20, indicating an oversold condition, we will enter a long position at the prevailing price, setting a stop-loss at $5 below the entry price and a target price at the midpoint of the Bollinger Bands. Conversely, if the RSI exceeds 80, signaling an overbought scenario, we will consider a short position, but given the overall upward trend, we will prioritize the long strategy. The portfolio will primarily focus on long positions, capitalizing on the anticipated price increase, with adjustments based on RSI and Bollinger Band signals to optimize returns and manage risk. Based on the historical data and forecast, STRK shows a slight upward trend. The support price consistently holds at $0.66, and the resistance is at $0.783. The RSI has been fluctuating, but recently moved above 40, indicating strengthening momentum. The Bollinger Bands show that the price has been trending toward the lower band, suggesting a potential for a bounce. Considering these factors, I recommend a long position. We will enter a long position at $0.663. The stop-loss will be set just below the support level at $0.65 to protect against a potential breakdown. The initial target price will be the resistance level at $0.783, aiming for a substantial profit. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI drops below 30 near the support level, it confirms an oversold condition, strengthening the long entry signal. Conversely, if the price touches the lower Bollinger Band, it's another confirmation of a potential bounce. If the price reaches the resistance level, we will consider moving the stop-loss to break even and setting a second target price at $0.8. This combined approach, leveraging both RSI and Bollinger Bands, offers a robust and adaptable strategy for maximizing returns while managing risk. Based on the historical data and forecast, Ethereum shows a volatile trend with periods of consolidation and upward movement. The RSI consistently hovers around the oversold level, indicating potential for a rebound. The Bollinger Bands suggest that the price is currently near the lower band, which could signal a buying opportunity. Considering the support price of $1,880 and the forecast predicting a slight upward trend, I recommend a long position. The entry price will be $1,930. To mitigate risk, set a stop loss at $1,880, just below the support level. A conservative target price would be $2,070, aligning with the recent resistance. To refine this strategy, we can incorporate the RSI and Bollinger Bands more actively. When the RSI dips below 30, consider entering a long position. If the price touches the lower Bollinger Band, it's another confirmation signal. For this strategy, the entry price will be $1,940. The stop loss should be placed at $1,900, slightly above the lower Bollinger Band. The target price will be $2,000, aiming for a moderate profit while considering the forecast subdued price movement. This combined approach of RSI and Bollinger Bands provides a more robust and adaptive investment strategy. Based on the historical data and forecast, XRP shows a mixed trend with periods of volatility. The RSI fluctuating around 50 suggests neither strong overbought nor oversold conditions consistently. However, the forecast indicates a potential downward trend in the coming week, with prices decreasing from $2.38 to $2.28. Considering this, I recommend a short-term contrarian strategy combined with Bollinger Bands analysis. We will initiate a short position at $2.39, anticipating a slight pullback. To mitigate risk, set a stop loss at $2.57, just above the upper Bollinger Band, which indicates strong resistance. Our target price for this short position is $2.28, aligning with the forecast price and the lower Bollinger Band. This strategy combines the forecast trend with the Bollinger Bands to capitalize on short-term price movements. The entry price of $2.39 provides a reasonable buffer, while the stop loss at $2.57 protects against unexpected upward spikes. The target price of $2.28 offers a potential profit of $0.11 per XRP unit. This is a high-risk, high-reward strategy suitable for experienced traders with a strong risk management plan. Based on the historical data and forecast, Binance Coin shows a slightly upward trend, bouncing between the support price of $587 and the resistance price of $668. The RSI fluctuates between 44.8 and 56.6, indicating periods of neither strong overbought nor oversold conditions. The Bollinger Bands have been widening, suggesting increased volatility. Considering these factors, I propose a moderately bullish strategy with a focus on capitalizing on potential upward movements while managing risk. My strategy involves entering a long position at $626, coinciding with the forecast price for April 2, 2025. To mitigate potential losses, I will set a stop-loss order at $618, just below the recent low. For the target price, I aim for $638, aligning with the forecast price and the upper Bollinger Band. This strategy combines the bullish forecast with technical indicators, providing a balanced approach to potentially high returns. Based on the historical data and forecast, Stellar shows a slight upward trend. The price has been fluctuating within the support of $0.274 and the resistance of $0.294. The RSI indicates that the asset is currently not significantly overbought or oversold, fluctuating around the mid-range. Considering the Bollinger Bands, the price is currently near the lower band, suggesting a potential bounce. Therefore, I recommend a long position with an entry price of $0.278. The stop loss should be set just below the support level at $0.274 to mitigate potential losses, and the initial target price should be the resistance level at $0.294. To refine the strategy, we can incorporate the RSI levels. If the price retraces to $0.272 and the RSI falls below 20, indicating an oversold condition, we can consider entering a long position at $0.272 with a stop loss at $0.268 and a target price of $0.296. Conversely, if the price reaches $0.285 and the RSI exceeds 80, indicating an overbought condition, we should consider exiting the position to avoid potential downward corrections. This combined strategy, blending Bollinger Bands and RSI, offers a balanced approach to capitalize on potential upward movements while managing risk effectively. Based on the historical data and forecast, Toncoin shows an overall upward trend. The RSI consistently remains above 30, indicating that the asset is not significantly oversold. The forecast prices predict continued growth, reaching $3.89. The support price is stable at $3.68, and the resistance price is $3.69. The Bollinger Bands suggest that the price is approaching the upper band, indicating potential for a breakout. Therefore, I recommend a long position strategy with an entry price of $3.66. Place a stop-loss order at $3.68 to mitigate potential losses if the price reverses. The target price for this trade is $3.89, based on the forecast data. This represents a potential gain of $23 per ton coin. To refine the strategy, I'll incorporate the RSI. If the RSI reaches 80, consider taking partial profits and moving the stop-loss to break even. This approach combines the trend analysis, forecast data, and technical indicators for a balanced and high-return investment strategy. The portfolio will be 70% based on the forecast data, 20% based on the RSI, and 10% based on the Bollinger Bands. Based on the historical data and forecast, Cardano demonstrates a sideways trend with fluctuating price action between the support of $0.673 and the resistance of $0.743. The RSI values remain largely within the 45 to 50 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting a potential for increased volatility. Given this, I propose a strategy focused on short-term price swings. We will implement a strategy that utilizes the RSI and Bollinger Bands to identify potential entry and exit points. Specifically, I recommend a long position when the price touches the bottom of the Bollinger Bands and the RSI is below 40. The entry price will be $0.661. The stop loss will be set just below the support level at $0.653 to limit potential losses. The target price will be the resistance level at $0.743, offering a substantial potential gain. Conversely, if the price touches the top of the Bollinger Bands and the RSI exceeds 70, we will consider a short position with an entry price of $0.797, a stop loss at $0.817, and a target price at $0.743. This combined strategy, blending Bollinger Band breakouts with RSI confirmation, should capitalize on short-term volatility while mitigating risk. Based on the historical data and forecast, Litecoin shows a weakening trend, with the forecast prices consistently below the recent closing prices. The RSI consistently remains below 45, indicating an oversold condition, particularly between March 13 and March 26. The Bollinger Bands also suggest a contraction, indicating a potential breakout. Considering this, I recommend a long position strategy. We will enter a long position at $89.8, placing a stop-loss order at $86.8 to limit potential losses. The initial target price will be $94.4, aiming to capitalize on a potential rebound. To refine this strategy, we will incorporate a dynamic approach. If the price breaks above $94.4, we will move the stop-loss to the entry price of $89.8, securing profits. If the price reaches $94.4 without a significant upward trend, we will close the position, taking a modest profit. This strategy combines the oversold signal from the RSI, the Bollinger Bands contraction, and the support level of $91 to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Swaycoin shows an upward trend with consistent support at $2.26. The RSI consistently fluctuates but has been trending upward, indicating increasing buying pressure. The Bollinger Bands have been widening recently, suggesting increased volatility and potential for price movement. Considering these factors, I recommend a long position strategy. We will initiate a long position at $2.39, placing a stop-loss order at $2.26 to limit potential losses. The initial target price will be $2.67, aligning with the forecast price and the upper Bollinger Band. To refine this strategy, we'll incorporate dynamic adjustments based on the RSI and Bollinger Bands. If the RSI reaches 80, we'll consider taking partial profits at $2.67 and tightening the stop loss to $2.5. Conversely, if the price touches the lower Bollinger Band, which is currently around $2.04, it could signal an oversold condition, prompting a re-evaluation of the long position and a potential adjustment of the stop-loss to $2.2. The final target price will be $2.67, capitalizing on the forecasted upward momentum and the expanding Bollinger Bands. Based on the historical data and forecast, Aptos exhibits an overall upward trend, consistently testing and nearing the resistance level of $6.03. The RSI consistently fluctuates, but generally remains above 40, indicating a bullish momentum. The Bollinger Bands show the price has been moving towards the upper band, signifying a potential upward trajectory. Therefore, I recommend a long position strategy. Entry price should be set at $5.82, coinciding with the initial forecast price. A stop loss should be placed just below the support level at $5.58 to mitigate potential losses. The target price should be set at $6.26, aligning with the recent upper Bollinger Band and providing a reasonable profit margin. To refine this strategy, we can incorporate RSI signals. If the RSI falls below 30, indicating an oversold condition, consider entering a long position at $5.87. The stop loss remains at $5.58. If the RSI rises above 70, suggesting an overbought condition, consider taking profits at $6. This combined strategy leverages both Bollinger Bands and RSI, providing a robust approach to capitalize on the upward trend of Aptos. The portfolio will be 60% based on Bollinger Bands and 40% based on RSI. Based on the historical data and forecast, SE demonstrates a fluctuating trend with recent upward momentum. The RSI consistently remains below 50, indicating a generally weak buying pressure. However, it has been oscillating around the 40 level, suggesting potential short-term rallies. The Bollinger Bands show that the price is currently near the lower band, indicating a potential oversold condition. Considering the forecast, the price is expected to remain around $0.20 for the next week, with a slight upward trend. Therefore, I recommend a long position strategy to capitalize on potential short-term bounces, while carefully managing risk. The entry price for this strategy will be $0.193. The stop loss should be set at $0.192, just below the support level, to protect against a further decline. The initial target price will be $0.208, aligning with the recent resistance level and the upper Bollinger Band. If the price reaches this target, we can consider a trailing stop loss to capture additional gains. This strategy combines RSI and Bollinger Band signals, with a focus on short-term price movements. The RSI reading of 39.2 suggests a slight oversold condition, while the price being near the lower Bollinger Band reinforces this view. This approach aims to capture quick profits from potential rebounds, while limiting losses with a well-defined stop loss. Based on the historical data and forecast, Ethereum Classic shows a fluctuating trend with support at $17.7 and resistance at $18.4. The RSI fluctuates between 39.6 and 48.1, indicating periods of oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting a potential for increased volatility. Considering this, I propose a strategy combining RSI and Bollinger Band signals. We will initiate a long position when the RSI falls below 20 and the price touches the lower Bollinger Band, and a short position when the RSI exceeds 80 and the price touches the upper Bollinger Band. Specifically, given the forecast for April 2, 2025 Wednesday, at $17.5, the RSI is expected to be around 45.2, and the price is near the lower Bollinger Band. We should enter a long position at $17.4, placing a stop-loss order at $17.2 to limit potential losses. The initial target price will be $18, aligning with the resistance level. If the price reaches $18, we can consider moving the stop-loss to the entry price to secure profits and potentially ride further upward momentum. This combined strategy aims to capitalize on both momentum and volatility, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Polygon exhibits a slight upward trend, bouncing between the support price of $0.206 and the resistance price of $0.271. The RSI consistently hovers below 50, indicating a generally oversold condition, particularly around 30.5 to 48.3. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential rebound. Therefore, I recommend a long position strategy focusing on capitalizing on the anticipated price recovery. Specifically, enter a long position at $0.216, placing a stop-loss order at $0.206 to mitigate potential losses if the price continues to decline. The initial target price should be $0.228, aligning with the forecast high for the week and the middle of the Bollinger Bands. If the price reaches $0.228, consider moving the stop-loss to the entry price of $0.216 to secure profits and reduce risk. A secondary target price of $0.271 can be set, corresponding to the resistance level, to capture a larger potential gain. This strategy combines the RSI's oversold signal, the Bollinger Band's indication of a potential rebound, and the support and resistance levels for a balanced and potentially high-return investment. Based on the historical data and forecast, AEVO shows a slightly upward trend. The RSI consistently hovers above 30, indicating that the asset is not significantly oversold. The Bollinger Bands show that the price has been fluctuating within a defined range, with the bottom band occasionally touching the support price of $0.122. The forecast suggests a slight decline in the short term, followed by stabilization around $0.12. Therefore, I recommend a moderate long position with a focus on short-term gains. My strategy is to enter a long position at $0.119, placing a stop-loss order at $0.118 to mitigate potential losses if the price declines further. The initial target price will be $0.13, aiming to capture a quick profit. If the price reaches $0.13, I will move the stop-loss to break even at $0.119 to secure the profit. If the price continues to rise, I will adjust the target price to $0.14. This strategy combines RSI and Bollinger Band signals, capitalizing on the current upward trend while managing risk through strategic stop-loss placement and dynamic target adjustments. Based on the historical data and forecast, optimism exhibits a slightly upward trend with periods of volatility. The RSI fluctuates around the 40 mark, indicating neither strong overbought nor oversold conditions. However, the recent dip on March 26, 2025, with a close price of $0.884 and an RSI of 45.1 suggests a potential pullback opportunity. Considering the forecast for the next week, the price is expected to hover around $0.86 to $0.88. Therefore, I recommend a long position with an entry price of $0.862. To manage risk, set a stop-loss at $0.849, which aligns with the support level. For the target price, aim for $0.886, based on the forecast high and a reasonable profit margin. To further refine the strategy, incorporate the Bollinger Bands. The price is currently near the lower band, indicating a potential bounce. The center of the Bollinger Bands is trending upwards, supporting an upward bias. Therefore, if the price retraces to $0.865, consider adding to the position. Maintain the $0.849 stop-loss. If the price reaches $0.886, take partial profits and move the stop-loss to break even. This adaptive approach balances risk and reward, capitalizing on the anticipated upward movement while protecting against potential downside risks. Based on the historical data and forecast, STRK shows a slightly downward trend with price fluctuations between the support of $0.162 and the resistance of $0.187. The RSI consistently remains within the 37.7 to 46.4 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show a narrowing trend, suggesting decreasing volatility. Considering these factors, I propose a moderately bullish strategy. We will initiate a long position when the price touches the support level of $0.162. The stop-loss will be set just below the support at $0.158 to mitigate potential losses if the price breaks down further. The target price will be set at the resistance level of $0.187, aiming to capitalize on a potential bounce from the support. To refine this strategy, we can incorporate the RSI and Bollinger Band signals. If the RSI dips below 20, indicating an oversold condition, we will enter a long position at $0.162, with a stop loss at $0.158 and a target price of $0.187. Conversely, if the price touches the lower Bollinger Band, we will also enter a long position at $0.162, with a stop loss at $0.158 and a target price of $0.187. The forecast data suggests a slight upward movement, further supporting this bullish approach. This combined strategy provides a balanced approach, leveraging both support levels and technical indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Solana shows a slightly upward trend, bouncing between the support of $137 and the resistance of $143. The RSI consistently remains below 52.1, indicating the asset is not currently overbought. Considering the forecast for the next week, the price is expected to hover around $131 to $138. I recommend a long position entry at $131, placing a stop-loss order at $127 to mitigate potential losses if the price declines. The initial target price should be $138, aiming for a modest profit. To refine this strategy, I incorporate the Bollinger Bands. The price has been trading near the lower band for some time, suggesting a potential bounce. If the price touches the lower band, which is around $110, it could be a strong signal for a long entry. However, given the current upward trend and the RSI readings, I will stick with the primary strategy. I suggest increasing the target price to $140 if the price breaks above the resistance of $143. This combined approach leverages both momentum and volatility indicators for a more robust investment decision. Based on the historical data and forecast, Jupiter shows a fluctuating trend with periods of consolidation and minor upward movement. The RSI consistently stays below the oversold level of 20, indicating a lack of strong selling pressure. The Bollinger Bands are narrowing, suggesting a period of low volatility, and the forecast price shows a sideways movement with slight downward pressure. Considering this, I recommend a cautious, range-bound strategy. We'll initiate a long position when the price touches the support level of $0.491, anticipating a bounce. The stop loss will be set at $0.481 to limit potential losses, and the initial target price will be $0.551, aiming for a modest profit. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30 while the price is near the support level of $0.491, it confirms an oversold condition, strengthening the long entry. The stop loss remains at $0.481. If the price approaches the upper Bollinger Band, which is currently around $0.578, it signals potential overbought conditions. We can then adjust our target price to $0.567. This combined strategy leverages both momentum and volatility indicators for a more informed decision-making process, maximizing potential returns while minimizing risk. Based on the historical data and forecast, Render shows an overall upward trend with increasing momentum. The RSI consistently moved above 40, indicating strengthening buying pressure. The Bollinger Bands have been expanding, suggesting increased volatility and potential for further price movement. Considering the support price of $3.5 and the resistance price of $4.18, and the forecast price for the next week, I recommend a long position. The entry price will be $3.6, coinciding with the beginning of the forecast period and a relatively low price within the recent trend. The stop loss should be set at $3.5, just below the support level, to limit potential losses. The target price for this trade will be $4.1, aligning with the forecast high for the week and approaching the resistance level. To refine the strategy, we can incorporate the RSI. If the RSI reaches 80, consider taking partial profits at $3.99. If the price touches the top of the Bollinger Bands, consider taking partial profits at $3.87. This blended approach combines trend analysis, technical indicators, and price forecasting to maximize potential returns while managing risk effectively. This strategy aims for a high return with a calculated risk, capitalizing on the current bullish momentum of render. Based on the historical data and forecast, Solana name service shows a slight downward trend. The price has been fluctuating between a support of $0.11 and a resistance of $0.139. The RSI consistently stays within the 40 to 48 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility, and the forecast predicts a price around $0.11 for the next week, which further reinforces the downward pressure. Therefore, a conservative short-term strategy is recommended. I suggest a short position with an entry price of $0.111. Given the support level at $0.11, place a stop-loss order at $0.113 to limit potential losses if the price unexpectedly reverses. For the target price, aiming for $0.109 aligns with the forecast and recent downward trend, offering a reasonable profit margin. This strategy leverages the predicted downward movement and utilizes tight stop-loss and target parameters to manage risk effectively. This is a high-probability, low-risk strategy to achieve high returns. Based on the historical data and forecast, Doge-Coin shows a slight upward trend with increased volatility. The RSI consistently fluctuates, indicating periods of both oversold and overbought conditions. The Bollinger Bands are widening, suggesting increased market volatility. Considering these factors, I recommend a combined strategy utilizing RSI and Bollinger Bands to maximize potential returns. We will implement a long position when the RSI dips below 30 and the price touches the lower Bollinger Band, aiming to capitalize on potential rebounds. Specifically, I suggest entering a long position at $0.175. The stop-loss should be placed just below the lower Bollinger Band at $0.145 to mitigate potential losses if the price continues to decline. The initial target price will be set at the center of the Bollinger Bands, $0.185. If the price reaches this level, we will reassess the situation and potentially move the stop-loss to break even. A secondary target price will be $0.19, based on the forecast data and the resistance level. This combined strategy aims to capture short-term gains while managing risk effectively. Based on the historical data and forecast, PEPE demonstrates an overall upward trend with increased volatility. The RSI consistently fluctuates, but the recent values are approaching overbought territory, indicating potential for a pullback. The Bollinger Bands are widening, suggesting increased price volatility and potential for breakouts. Given the support price of $0.0000760 and the forecast indicating a move towards $9.06, a long position strategy is advisable. I recommend entering a long position at $0.0000820. Set a stop-loss order at $0.0000760 to protect against a potential downward correction. The initial target price should be $9.06, aligning with the forecast. To optimize the strategy, I will integrate the RSI and Bollinger Band signals. If the RSI drops below 30, consider adding to the position at $0.0000790. Conversely, if the price touches the upper Bollinger Band, consider taking partial profits at $0.0000840. The overall portfolio should be a mix of these strategies, prioritizing the initial long position with adjustments based on RSI and Bollinger Band signals to maximize returns and manage risk. This approach combines trend following with reactive adjustments for increased efficiency. Based on the historical data and forecast, SHIB shows an upward trend, supported by consistently rising prices over the past 2 weeks and a forecast indicating further increases. The RSI fluctuates between 36.3 and 57.1, with recent values nearing 57.1, suggesting the asset is approaching overbought conditions. The Bollinger Bands show that the price is trending upwards, and the forecast price is above the center of the Bollinger Bands. Therefore, I recommend a long position with an entry price of $0.0000140. To mitigate risk, set a stop loss at $0.000135, just below the recent support level and the forecast price. For the target price, aim for $0.000147, aligning with the forecast price and the upper Bollinger Band. To refine this strategy, I will incorporate the RSI indicator. If the RSI falls below 20, indicating an oversold condition, consider entering a long position. Conversely, if the RSI exceeds 80, suggesting an overbought state, consider exiting the position or taking profits. The Bollinger Bands provide additional confirmation. If the price breaks above the upper band, it signals a potential continuation of the upward trend, reinforcing the long position. If the price touches the lower band, it suggests a potential pullback, and a move to the stop loss might be necessary. This combined approach balances the upward trend with RSI and Bollinger Band signals for optimal risk management and high returns. Based on the historical data and forecast, DOG-COIN demonstrates a fluctuating trend with recent consolidation around the $0.50 to $0.56 range. The RSI consistently remains above the oversold level of 20, indicating a lack of strong selling pressure. However, it oscillates around the 40 to 50 range, suggesting a neutral to slightly bullish momentum. The Bollinger Bands show that the price has been fluctuating within the bands, with recent proximity to the lower band. Considering the forecast data, the price is expected to hover around $0.509 to $0.529, indicating a potential for moderate upward movement. Therefore, I recommend a moderately bullish strategy focusing on short-term gains. My recommended strategy is to enter a long position at $0.515, coinciding with the forecast price on April 2, 2025. Set a stop-loss order at $0.505, slightly below the lower Bollinger Band to mitigate potential losses if the price declines. The target price should be $0.535, aligning with the resistance level and the forecast price on March 30, 2025. This strategy leverages the anticipated upward movement while incorporating risk management through the stop-loss. The RSI reading suggests the asset is not currently overbought, providing room for further price appreciation. This approach aims for a $20 profit per contract while limiting potential losses to $10. Based on the historical data and forecast, Doge-Coin demonstrates an overall upward trend, supported by consistently hitting the support price of $0.00235 and approaching the resistance price of $0.00317. The RSI consistently remains above the oversold level of 20, indicating a bullish sentiment. The Bollinger Bands show that the price is currently trending towards the upper band, suggesting further upward potential. Therefore, I recommend a long position strategy. We will enter a long position when the RSI falls below 30, with an entry price of $0.0023. The stop loss will be set just below the support level at $0.0022 to protect against potential downside risks. The initial target price will be the resistance level of $0.00317, aiming for a significant profit. To further refine the strategy, we will implement a trailing stop loss based on the Bollinger Bands. As the price moves upward, the stop loss will be adjusted to the lower Bollinger Band. For example, if the price reaches $0.0028, the stop loss will be moved to $0.0019. If the price continues to rise, we will set a second target price at $0.003 for additional gains. This combined strategy leverages the RSI for initial entry, the support and resistance levels for price targets, and the Bollinger Bands for dynamic risk management, maximizing potential returns while minimizing losses. Based on the historical data and forecast, Near Protocol shows a generally upward trend, with recent fluctuations. The RSI indicates periods of both oversold and overbought conditions, while the Bollinger Bands suggest increasing volatility. Given this, I recommend a combined strategy leveraging all three indicators. We will initiate a long position when the RSI dips below 20, signifying an oversold condition. Currently, the RSI is trending around 54, so we'll wait for a more significant pullback. When the RSI reaches below 20, we enter at $2.86. Place a stop-loss order slightly below the lower Bollinger Band at $2.15 to protect against unexpected downturns. Our initial target price will be the upper Bollinger Band, set at $3.08, aiming for a quick profit. To refine the strategy, we will use the forecast data to anticipate potential price movements. If the RSI remains below 20 and the price approaches the support level of $2.82, we will enter a long position at $2.82. The stop loss will be set at $2.15, and the initial target will be $3.06, based on the forecast. As the price approaches the target, we will reevaluate and potentially adjust the target price based on the prevailing trend and RSI levels. If the RSI moves above 80, we will consider taking profits or tightening the stop loss to protect gains. This combined approach, incorporating RSI, Bollinger Bands, and forecast data, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Internet Computer shows an overall upward trend with price fluctuations. The RSI consistently remains above 36, indicating a moderate bullish momentum. The Bollinger Bands also suggest a bullish trend, as the price has been fluctuating within the bands and has been trending upwards. Considering these factors, I recommend a long position strategy. We will enter a long position at $5.87. The stop loss will be set at $5.67, just below the support level, to limit potential losses. The initial target price will be $6.35, the resistance level, aiming for a quick profit. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI dips below 36, indicating an oversold condition, we will consider a buy-in at the lower band of the Bollinger Bands. Conversely, if the RSI reaches above 75, indicating an overbought condition, we will consider taking profit at the upper band of the Bollinger Bands. For the forecast period, if the price breaks above $6.35, we will adjust the target price to $6.5. This dynamic approach, combining trend analysis, support and resistance levels, and RSI/Bollinger Band signals, should maximize returns while managing risk effectively. Based on the historical data and forecast, Injective shows a generally upward trend, though with some volatility. The RSI consistently fluctuates, often nearing oversold conditions, providing potential buying opportunities. The Bollinger Bands indicate periods of increased volatility, with the price occasionally touching the lower band. Considering these factors, I propose a combined strategy leveraging RSI and Bollinger Bands for optimal returns. We will implement a strategy focusing on buying when the RSI dips below 30 and the price touches the lower Bollinger Band, aiming to capitalize on temporary market dips. Specifically, let's initiate a long position when the RSI falls below 30 and the price reaches 7.88. The entry price will be 7.88. To manage risk, we'll set a stop loss at 7.69, just below the lower Bollinger Band. Our primary target price will be 10.3, aligning with the established support level. A secondary target could be 13.0, the resistance level. This combined strategy should provide a high return with a clear risk management framework. Based on the historical data and forecast, BTC has shown volatility within a defined range of $247 support and $269 resistance. The RSI consistently fluctuated, often near the oversold level of 34.2 to 46.7, indicating potential for price swings. The Bollinger Bands also reflect this volatility, with the price frequently touching or crossing the upper and lower bands. Given the recent upward trend and the forecast predicting prices around $245 to $248, a cautious bullish strategy is recommended. I suggest entering a long position at $243 with a stop loss at $238 to mitigate potential losses if the price reverses. A target price of $255 is set, aiming to capture a reasonable profit while respecting the established resistance level. To optimize the portfolio, I propose a combined strategy leveraging the RSI and Bollinger Bands. Initially, enter a long position at $243. If the RSI dips below 30, indicating a stronger oversold condition, consider adding to the position at $238. The stop loss remains at $238 for both entries. The primary target price is $255, but if the price breaks above the upper Bollinger Band, consider raising the target to $268, reflecting a stronger bullish momentum. This tiered approach allows for capitalizing on both short-term bounces and potentially larger upward movements, while maintaining risk management through defined stop-loss levels. Based on the historical data and forecast, THETA network shows a generally upward trend, but with recent volatility. The RSI consistently remains below 50, indicating that the asset is not currently overbought. Considering the support price of $0.963 and the forecast predicting a move towards $0.992, I recommend a long position strategy. We will utilize a combination of RSI and Bollinger Bands to maximize potential returns. The entry price will be $0.938 on March 27, 2025. A stop loss will be placed just below the support level at $0.95 to protect against unexpected downturns. The initial target price will be $0.992, aligning with the forecast for April 2, 2025. To refine the strategy, we will incorporate the Bollinger Bands. If the price touches the lower band, which is currently around $0.738, it signals a potential oversold condition, reinforcing our long position. Conversely, if the price reaches the upper band, around $0.738, it suggests a potential overbought condition, prompting us to consider taking profits or tightening the stop loss. We will adjust the target price to $1 if the RSI reaches 60, indicating a shift towards overbought territory. This combined approach, utilizing RSI for trend confirmation and Bollinger Bands for volatility assessment, should provide a robust and adaptable investment strategy for THETA network. Based on the historical data and forecast, WorldCoin shows a fluctuating trend with recent upward momentum. The RSI consistently stays above 30, indicating a neutral to slightly bullish sentiment. The Bollinger Bands show the price recently moved toward the upper band, suggesting potential for further upward movement. Considering these factors, I recommend a long position strategy. The entry price should be $0.875, coinciding with the first day of the forecast period and the recent upward trend. A stop loss should be placed at $0.818, slightly below the recent low, to limit potential losses. The target price is set at $0.942, aligning with the forecast high and offering a reasonable profit margin. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, consider a buy order at $0.875, with a stop loss at $0.818 and a target price of $0.942. If the price touches the lower Bollinger Band, it signals a potential buying opportunity at $0.875, with the same stop loss and target price. Conversely, if the price reaches the upper Bollinger Band, consider taking profits at $0.942. This combined approach leverages both indicators to maximize profit potential while minimizing risk. Based on the historical data and forecast, Hooked Protocol shows a fluctuating trend with periods of consolidation around the support price of $0.142. The RSI values have generally been in the oversold territory, indicating potential for a bounce. The Bollinger Bands suggest volatility, with the price often testing the upper and lower bands. Considering the forecast for the next week, the price is expected to remain around $0.145, indicating a sideways movement. Therefore, I recommend a moderately bullish strategy focusing on short-term gains. My strategy is to enter a long position at $0.143, coinciding with the first day of the forecast. Given the recent RSI readings and the Bollinger Bands width, I will set a stop loss at $0.142 to protect against a potential downward reversal. The initial target price will be $0.148, aligning with the forecast for March 27, 2025, and the upper Bollinger Band. If the price reaches this target, I will adjust the stop loss to break even to secure the initial investment and potentially set a secondary target at $0.152. This strategy combines RSI-based entry, Bollinger Bands for volatility assessment, and support/resistance levels for risk management, aiming for a balance between risk and reward. Based on the historical data and forecast, Artificial Superintelligence Alliance exhibits a fluctuating trend with support around $0.505 and resistance around $0.562. The RSI fluctuates between 34.3 and 47.7, indicating periods of both oversold and overbought conditions. The Bollinger Bands show periods of volatility, with the price occasionally touching the lower band, suggesting potential oversold opportunities. Considering these factors, I recommend a combined strategy incorporating RSI, Bollinger Bands, and support/resistance levels. The strategy will prioritize entries when the RSI is below 20, and the price is near the support level of $0.505. Specifically, I suggest entering a long position at $0.505, placing a stop-loss order at $0.495 to mitigate potential losses. The initial target price will be $0.53, aligning with the middle Bollinger Band and a modest price appreciation. If the price reaches $0.53, we will reevaluate based on the RSI and Bollinger Bands. If the RSI is below 30 and the price is still below the upper Bollinger Band, we can extend the target to $0.543. This combined approach leverages multiple indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Polkadot shows an overall upward trend. The price has been fluctuating within a support price of $4.32 and a resistance price of $5.16. The RSI indicates that the asset is currently in a neutral to slightly overbought zone, with values ranging from 36.6 to 55.7. The Bollinger Bands suggest that the price is approaching the upper band, indicating a potential for a pullback or consolidation. Considering these factors, I recommend a strategy that combines RSI and Bollinger Band signals. The strategy involves a long position when the RSI falls below 36.5 and the price touches the lower Bollinger Band. The entry price would be $3.85, with a stop-loss placed just below the lower Bollinger Band at $3.75 to mitigate risk. The initial target price would be the resistance level at $5.16. If the price reaches $5.16, consider moving the stop-loss to break even to protect profits. A second target price could be set at $4.85 based on the forecast data. This strategy aims to capitalize on the upward trend while incorporating risk management techniques. Based on the historical data and forecast, Filecoin shows a slight upward trend. The price has been fluctuating within a support of $2.92 and a resistance of $3.13. The RSI indicates that the asset is currently in a neutral zone, with values ranging from 44 to 52. The Bollinger Bands show that the price is approaching the middle band, suggesting potential for a breakout. Considering these factors, I recommend a long position strategy. We will enter a long position at $3.02, placing a stop-loss order at $2.92 to limit potential losses. The initial target price will be $3.13, aligning with the resistance level. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we can consider adding to our position at $3.02. Conversely, if the price touches the lower Bollinger Band, it could also be an entry point. If the price breaks above the upper Bollinger Band, we can consider raising the target price to $3.24. This combined approach balances risk and reward, aiming for high returns while protecting against significant downside. The portfolio will prioritize the long position strategy, adjusting entries and targets based on RSI and Bollinger Band signals for optimal performance. Based on the historical data and forecast, Conflux shows a slight upward trend with some volatility. The RSI consistently remained below the overbought level of 80, indicating that the asset is not currently overvalued. However, it has been approaching the oversold level of 20 recently, suggesting potential buying opportunities. The Bollinger Bands have been narrowing, indicating decreasing volatility, and the price is currently near the middle band. Considering these factors, I recommend a long position strategy with a focus on capitalizing on potential upward movements while managing risk. My strategy involves entering a long position at $0.0889. The stop loss should be set at $0.0868 to protect against a potential downturn. The initial target price is $0.0948, aligning with the recent resistance level. If the price reaches the target, we can reassess the situation and consider a trailing stop loss to capture further gains. Given the forecast predicting a gradual increase, this strategy aims to capitalize on the upward momentum while incorporating risk mitigation measures. This strategy combines RSI, Bollinger Bands, and support/resistance levels for a balanced approach. Based on the historical data and forecast, Ethereum name service shows a downtrend with a forecast price consistently below the recent closing prices. The support price is consistently at $16.5, while the resistance is at $17.9. Considering the RSI values, the asset has been fluctuating between oversold and overbought conditions, but currently sits in the mid-range. The Bollinger Bands indicate a narrowing trend, suggesting potential volatility. Therefore, I recommend a short-selling strategy targeting a decline towards the support level. Specifically, I suggest entering a short position at $16.7. The stop loss should be set at $17 to limit potential losses if the price unexpectedly rises. The initial target price is $16.5, coinciding with a strong support level. If the price reaches $16.5 and shows signs of stabilization, consider moving the stop loss to break even to protect profits. A secondary target price can be set at $16 for a more aggressive profit-taking approach. This strategy combines technical indicators and price action to capitalize on the anticipated downtrend while managing risk effectively. Based on the historical data and forecast, Avalanche shows a clear upward trend. The price has consistently moved towards the resistance level of $24.4, with recent momentum suggesting continued gains. The RSI indicates that the asset is currently in a neutral to slightly overbought territory, fluctuating between 40 and 60. However, considering the forecast prices, which predict a steady climb to $23.4, a long position is warranted. We will implement a strategy focusing on the RSI and Bollinger Bands, with an initial entry at $20.9. A stop loss will be set at $18.8 to mitigate potential downside risk, and a target price of $23.4 will be set to capitalize on the anticipated upward movement. To refine this strategy, we will incorporate Bollinger Band signals. When the price touches the lower band, indicating a potential oversold condition, we will consider a supplementary entry. For instance, if the price retraces to $16.1, we can enter a long position with a stop loss at $15.9 and a target price of $20.9. This layered approach allows us to capture both the primary upward trend and potential bounce-back opportunities. Combining both strategies, the portfolio will be diversified and more efficient to achieve high returns. Based on the historical data and forecast, Doge-Coin shows a slight upward trend with price fluctuations. The RSI consistently remains below 60, indicating that the asset is not currently in an overbought condition. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation. Considering the support price of $0.0251 and the forecast predicting a price around $0.0267, a long position strategy is recommended. I suggest entering a long position at $0.0256. A stop loss should be placed just below the support level at $0.0250 to limit potential losses. The initial target price should be set at $0.0267, aligning with the forecast high. To refine the strategy, we can incorporate the RSI. If the RSI dips below 30, indicating an oversold condition, it would be a strong signal to enter a long position at $0.0256 with a stop loss at $0.0250 and a target price of $0.0267. If the price approaches the upper Bollinger Band, consider taking partial profits at $0.0263 and moving the stop loss to break even at $0.0256. This approach combines trend analysis, RSI signals, and Bollinger Band dynamics to maximize potential returns while managing risk effectively. Based on the historical data and forecast, PENDLE exhibits an overall upward trend, consistently bouncing off the support price of $2.52. The RSI indicates periods of both oversold and overbought conditions, fluctuating between 32.5 and 61.4. The Bollinger Bands show increasing volatility, with the price frequently touching the upper band, suggesting bullish momentum. Considering this, I recommend a long position strategy with an entry price of $2.67 on March 27, 2025. A stop loss should be placed slightly below the support level at $2.5 to mitigate potential losses, and a target price of $2.93, aligning with the forecast price and recent resistance levels, should be set for realizing profits. To enhance the strategy, I suggest incorporating RSI and Bollinger Band signals. If the RSI falls below 20, consider a long entry at $2.52, with a stop loss at $2.45 and a target price of $2.8. Conversely, if the RSI exceeds 80, consider a short entry at $2.94, with a stop loss at $2.99 and a target price of $2.75. Combining these strategies, the most efficient portfolio would prioritize long positions based on the prevailing upward trend, while utilizing RSI and Bollinger Bands for tactical entries and exits, maximizing potential returns while managing risk. Based on the historical data and forecast, the sandbox shows a slight upward trend. The RSI consistently fluctuates, but it has been above 35, indicating that the asset is not severely oversold. The Bollinger Bands have been widening recently, suggesting increasing volatility. Considering these factors, I recommend a moderately bullish strategy. We will enter a long position at $0.295. The stop loss will be set at $0.26, just below the lower Bollinger Band, to protect against unexpected downturns. The initial target price is $0.316, aligning with the forecast for April 2, 2025. To enhance returns and manage risk, we will employ a dynamic trailing stop-loss strategy. Once the price reaches $0.31, we will adjust the stop-loss to $0.28. If the price continues to rise, we will further increase the stop-loss to $0.29. The final target price will be $0.36, the resistance level. This approach combines the benefits of RSI, Bollinger Bands, and support/resistance levels, creating a robust portfolio for the sandbox. This strategy prioritizes high returns while incorporating risk management techniques to safeguard capital. Based on the historical data and forecast, Decentraland shows a slight upward trend with periods of consolidation. The RSI fluctuates between 41.4 and 50.2, indicating neither strong overbought nor oversold conditions consistently. The Bollinger Bands have been contracting recently, suggesting a period of lower volatility. Considering these factors, I recommend a moderately bullish strategy. We will initiate a long position at $0.275. The stop loss will be set at $0.262, just below the established support price, to limit potential losses. The initial target price will be $0.285, aligning with the forecast price and the upper Bollinger Band. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 20, we will enter a long position at $0.271, with a stop loss at $0.262 and a target price of $0.285. If the price touches the lower Bollinger Band, we will enter a long position at $0.25, with a stop loss at $0.247 and a target price of $0.285. Combining these three strategies, the most efficient portfolio will be to enter a long position at $0.275, with a stop loss at $0.262 and a target price of $0.285. This approach balances potential gains with risk management, capitalizing on the anticipated upward trend while protecting against significant downside movements. Based on the historical data and forecast, ENG coin shows a slightly upward trend. The RSI consistently fluctuates between 34.8 and 50.9, indicating periods of oversold and overbought conditions. The Bollinger Bands show that the price has been moving within the bands, with occasional touches of the upper and lower bands. The support price is consistently at $0.0892, and the resistance price is at $0.0997. Considering the RSI and Bollinger Bands, I recommend a strategy that combines both indicators for a more robust approach. My recommended strategy is to buy ENG coin when the RSI falls below 30 and the price touches the lower Bollinger Band. The entry price should be $0.0839. Set a stop-loss order at the support price of $0.0892 to limit potential losses. The target price should be set at the resistance price of $0.0997, aiming for a significant profit. As the forecast indicates an upward trend, this strategy should yield high returns. This portfolio is the most efficient because it combines the strengths of both RSI and Bollinger Bands, providing multiple confirmation signals before entering a position. Based on the historical data and forecast, Uniswap shows a fluctuating trend with a recent bounce from the support price of $6.67. The RSI consistently remains below 50, indicating a generally oversold condition, with values frequently dipping below 40. The Bollinger Bands have been widening recently, suggesting increased volatility. Considering these factors, I recommend a moderately bullish strategy. We will initiate a long position when the price touches the support level of $6.67. The stop loss will be set slightly below the support at $6.52 to mitigate potential losses if the price breaks down. Our target price will be $7.06, just below the recent resistance level, aiming for a reasonable profit. To refine this strategy, we will incorporate the Bollinger Bands. If the price approaches the lower band while the RSI is below 40, it strengthens our buy signal at $6.67. The stop loss remains at $6.52. If the price moves above the middle band, we will consider tightening the stop loss to $6.73. The target price remains $7.06. This combined RSI and Bollinger Bands approach aims to capitalize on the current oversold conditions and potential upward momentum, while carefully managing risk with defined stop-loss and target levels. This is a high-risk, high-reward strategy suitable for experienced investors. Based on the historical data and forecast, Chainlink shows a generally upward trend, consolidating within the $12.7 to $15.4 range. The RSI consistently fluctuates, but has not reached oversold or overbought levels recently. The Bollinger Bands have been narrowing, indicating a period of consolidation, but the forecast suggests a potential breakout. Therefore, I recommend a moderately bullish strategy. We will initiate a long position when the price breaks above the upper Bollinger Band, which is currently $16. The entry price will be $16. To manage risk, the stop loss will be set just below the lower Bollinger Band at $12.4. The initial target price will be the recent resistance level of $15.4. To refine the strategy, we will incorporate RSI signals. If the price approaches the $15.4 resistance and the RSI is below 80, we will adjust the target price to $14.9, which is the forecast price for the week. If the RSI reaches 80 before reaching $15.4, we will consider taking partial profits and tightening the stop loss to the center of the Bollinger Bands at $14.2. This blended approach combines breakout confirmation with RSI-driven adjustments to maximize potential returns while minimizing downside risk. Based on the historical data and forecast, Aave shows a slightly bullish trend with periods of consolidation. The RSI consistently fluctuating around the 40 mark suggests we are not in extreme overbought or oversold territory. The Bollinger Bands have been contracting recently, indicating a period of lower volatility and potential for a breakout. Considering the support at $164 and the recent price action, I recommend a long position. The entry price should be $172, coinciding with the initial forecast price and recent consolidation. A stop loss should be placed just below the support level at $161 to protect against a potential downside reversal. For the target price, I anticipate a move towards the recent resistance level of $182, offering a reasonable profit margin. The strategy combines the RSI and Bollinger Band signals, aiming to capitalize on a breakout from the consolidation phase. Therefore, the target price should be $182. This strategy provides a clear risk-reward ratio and aligns with the overall bullish outlook, while also incorporating risk management through the stop-loss order. This approach should yield high returns. Based on the historical data and forecast, EOS shows a mixed trend with recent upward momentum. The RSI values fluctuate around 50, indicating neither strong overbought nor oversold conditions. However, the forecast data suggests a continued upward trajectory, with prices potentially reaching $0.594 by April 2, 2025. Considering the support level at $0.535 and the resistance at $0.636, and the Bollinger Bands, I propose a long position strategy. We will enter a long position at $0.562, coinciding with the first day of the forecast. Our stop loss will be set just below the support level at $0.535, providing a buffer against potential pullbacks. The initial target price will be $0.594, aligning with the forecast high, giving us a potential gain of $32. To refine this strategy, we'll incorporate the Bollinger Bands. If the price approaches the upper band, we'll consider taking partial profits at $0.588, securing some gains. If the price breaks through the resistance level of $0.636, we'll adjust our target price to $0.65, anticipating further upward movement. The RSI readings suggest that we are not in an overbought situation, allowing for a continued upward trend. This strategy combines the forecast data, support and resistance levels, and Bollinger Bands to maximize potential returns while managing risk effectively. This will be a dynamic strategy, adjusting the target price based on market conditions. Based on the historical data and forecast, Tron shows a slight upward trend with price fluctuations. The RSI values are generally within the neutral range, occasionally dipping below 40 and rising above 55, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been fluctuating, with the price occasionally touching the upper or lower bands. Considering the support price of $0.232 and the resistance price of $0.244, I recommend a long position strategy. The entry price will be $0.231, placing the stop loss at $0.228 to limit potential losses. The initial target price will be $0.237, aiming to capitalize on the upward trend. To refine the strategy, I will incorporate the Bollinger Bands and RSI. If the price touches the lower Bollinger Band, which is around $0.213, it signals a potential buying opportunity due to the oversold condition. However, considering the recent price action and forecast, I will maintain the initial strategy. If the price reaches the target of $0.237, I will adjust the stop loss to the entry price of $0.231 to protect profits. I will also consider raising the target price to $0.244, the resistance level, if the upward momentum continues. This combined approach leverages both technical indicators and price levels for a more robust investment strategy. Based on the historical data and forecast, Suncoin shows a sideways trend with support around $0.0164 and resistance around $0.0167. The RSI fluctuates between 30 and 60, indicating neither strong bullish nor bearish momentum. The Bollinger Bands have been relatively tight recently, suggesting low volatility. Considering the RSI is currently below 50 and approaching the oversold level of 20, a moderately bullish strategy is advisable. I recommend a strategy that combines RSI and Bollinger Bands. The entry price will be $0.0164 when the price touches the support price. The stop loss price will be set just below the support level at $0.0159. The target price will be the resistance level at $0.0167, aiming for a small but consistent profit. To refine the strategy, I will incorporate a secondary signal from the Bollinger Bands. If the price approaches the lower band of $0.0152, it reinforces the oversold condition, providing a stronger confirmation for entry. Conversely, if the price touches the upper band of $0.0184, it suggests a potential overbought condition, and we will avoid entering a long position. The final portfolio will be a long position at $0.0164 with a stop loss at $0.0159 and a target price at $0.0167. This strategy balances risk and reward, capitalizing on short-term price fluctuations within the established range.